Hi, my name is Enrique. At here in Empire Brokerage, we have different solutions for our agents and for their clients. And today's topic on life insurance, we're going to talk about riders. So I'm going to review a short list of the most popular riders that we have. So most think of the living benefits riders. And those riders can be for terminal illness. We're talking about term insurance here, or even permanent insurance. You could have either terminal illness rider, chronic illness rider, or critical illness rider. So many carriers offer this already in the policy itself, no additional cost. Other carriers may have a lower priced term solution or permanent solution, but you need to add the riders to the product itself. Terminal illness, pretty straightforward. If you're diagnosed with a terminal illness within a year or 2 years with some carriers, they will advance part of that death benefit to you to use at that time. If you're diagnosed with a critical or chronic illness, those advances are made so that you can use it for whatever care you may need under chronic or critical illness. Some people like to think of it as a long-term care alternative to pay for those costs for long-term care. So another rider, so as I mentioned, those three, those are usually included, but you can add them. Now the following, definitely you need to add to your policy if the carrier offers them for that specific policy. So the one I've been getting most recently is return of premium rider. The return of premium rider, as the name suggests, is that as you're paying your premium over time, potentially you can get back some of that money that you paid into the policy itself. So let's say you have a 20-year term, and with a return of premium rider, if you make it to the finish line, and I use that terminology, meaning that you have lived beyond the 20 years. So before your policy expires, you request that any cash value, if you will, or premium that's been built up, that it be returned back to you. If you do that before the policy expires, well, in this case, with a return of premium rider, no more coverage would be in place. You would get your money back or whatever money is available, but no more coverage after that. That's the idea. After 20, 30 years, no more coverage, but you get money back, and people like that idea. Now, the next rider to consider would be the child rider. So as a young parent, many times they have heard of some situation where, God forbid, something happened to a child. And the experience was that they had to come up with all these unexpected funeral expenses. And in that tragedy, well, they realized that, well, they need to get some coverage for their children. So any minor children, and if the parent decides to get a life insurance policy, they can select a rider for child. So they'll have some coverage, $5,000, $10,000. I've seen up to $25,000 should, God forbid, that child pass away. So the idea is to have some coverage to pay for those expenses or to recoup from any type of medical debt that they might have gone through in a scenario, tragic scenario like that. So that is for the child rider. Sometimes that child rider, on the positive side, if the child lives beyond a certain age, some carriers will allow that rider to be converted to the individual child's coverage. In other words, they get their own policy. So that's another example, another possibility of getting that rider. So another rider that I've come across is the accidental death rider. So this is the other one that's most popular. So this separate rider that you need to add would be the one where, let's say you have $100,000 term coverage, and the rider for accidental death, by the way, you would have to die, pass away from the direct result of the accident itself. So in my example, just making up an example here, is that the death from the accident, that could be $200,000. So the term coverage, $100,000 plus the additional $200,000. So the beneficiary would receive a total of $300,000 in that scenario, with the rider having been included at the beginning of the contract. So these are the most popular ones that I come across. There are others, but I just wanted to share those with you. If you have any questions, feel free to give us a call here at Empower Brokerage at 888-539-1633. Thank you.